Okay, we'll now look at some exercises from Chapter 10. And Chapter 10 deals with property, plant, and equipment, as well as intangible assets, acquiring them, and disposing of them. So I thought we'd go through a few of the exercises here. Let's start with exercise 10.1 on page 566. Now in financial accounting, we would say maybe company purchased a building for $300,000, or a company purchased land for $200,000, and we just make the journal entry. Well, in real life, as you can imagine, a lot of times it's not quite that simple. There can be a lot of different costs associated with purchasing a building or land, and we have to decide of those costs which ones are expenses that should be taken against the current year's revenues on the income statement, and which ones should be counted as part of the land or part of the building. And if it's part of the building, it's counted there, then it would be depreciated over time. So I thought we'd go through exercise 10.1 here, and which deals with that very issue. It says on March 1st, 2016, Belden Corporation purchased land as a factory site for $60,000. An old building on the property was demolished, and construction began on a new building that was completed on December 15th, 2016, which is their same year. Costs incurred during this period are listed below. Okay, the demolition of the old building cost $4,000. Architect's fees for the new building, $12,000. Legal fees for title investigation of the land, which is very important. You don't want to buy land without a title investigation. You want to make sure no one has claim to the land other than the person you're purchasing it from. No liens on the land, that kind of thing. So, in other words, I would never buy land without a title search to make sure no one else has claim to it. Property taxes on the land for the period beginning after the date of purchase there on March 1st, 2016, $3,000. Construction costs of the new factory or new building, I believe it was a factory. That's right, $500,000. And interest on the construction loan, $5,000. Salvaged materials resulting from the demolition of the building were sold for $2,000. Determine the amounts that Belden should capitalize as the cost of the land and the cost of the building. Okay, of those costs, they want to know which ones should be included as part of the cost of the land and carried on the books as an asset until it's sold. Which ones should be included as part of the cost of the building, and it would be placed on the books as a building and then depreciated over time, usually 40 years on a building. And then should any of these costs be expensed in the year 2016? Okay, so let's start with the capitalized cost of land. And the logical place to start there, I think, is the purchase price on the land. And that's given in the first sentence. On March 1st, 2016, Belden Corporation purchased land as a factory site, $60,000. Okay, demolition of the old building. That would also be a part of the cost of the land, you guys. Getting the land into the condition that it needs to be in order to build the new building or whatever. Getting the land to a condition in which we can use it for its intended purpose. There we go. I was having a hard time finding the correct words. So cleaning the land up and getting it into a condition so that it can be used for its intended purpose. In this case, its intended purpose is we're going to use it to build a factory on. Well, we can't build the factory with the old building there. So if we need to demolish that building, that's part of the cost of the land. Any grading, which is not listed here, but any grading or leveling of the land that would have to be done would also be a part of the cost of the land. Okay, so we'll include that here. Demolition of the old buildings, part of the cost of the land, less the sale of the salvage materials from the demolition. They were what, $2,000? Okay. So when we take the difference there, 4,000 plus the negative 2,000 or minus 2,000 leaves us $2,000, which will add to the purchase price. And that gets us $62,000. We'd also want to include as part of the cost of the land the legal fees for the title investigation. That was $2,000 as well. And then we're going to add that to our subtotal of $62,000. And that gets us $64,000, which is the total capitalized cost of the land, $64,000. So it's our purchase price plus the cost to demolish the old building, less any materials that we were able to sell from the demolition, gets us to, and we add that back to the purchase price, gets us to our subtotal of $62,000. Then any legal fees for the title investigation would be a part of the cost of the land. So our total capitalized cost of the land is $64,000. Okay, now let's determine the capitalized cost of the building. Would start with the purchase price. I think would be an obvious place to start. And it's not actually purchase price though on the cost of the building. Instead, it's going to be construction cost. Excuse me. We didn't purchase the building; we're building it. Construction cost for $500,000. Architect fees would be as part of the cost of the capitalized cost of the building itself. The architect fees here were $12,000. And then the interest incurred during the construction period. Interest on the construction loan would also be a capitalized part of the building. Any interest incurred after construction would, of course, be expensed in the period in which it's incurred. Here we have $5,000. We get total capitalized cost of the building. Will be the sum of those three, or $517,000. So that's the amount we would depreciate over the useful life of the building. Generally, we think of buildings having a useful life of 40 years. Now that only leaves one item: property taxes on the land for the period beginning March 1st through, or for the period beginning March 1st, 2016 through the end of the construction. You guys, even though those property taxes were incurred during the construction process, they're still expensed in the period incurred. Taxes, as far as I could, any property taxes would always be expensed or taken as an expense in the period in which the property taxes are incurred. So it would show up as property tax expense, a reduction of revenues on the face of the income statement. It said property taxes on the land for the period after acquisition are not a part of the acquisition cost. So they're not a part of the cost of the land, or not a part of the capitalized cost of the building. Instead, they are expensed in the period in which they are incurred, like all other expenses. Okay, I hope that one helps with exercise 10.1 on the Connect Plus site. If you have any issues, please be in touch with me. Thanks a lot.